Good evening and welcome back to the latest edition of the Invest Talk Market Analysis for the week ending June 21st, 2024. Aloha to everyone. I just got back from Kauai on a little R&R trip with my fiance, and we're back, and that's why I'm getting to you a little late. So uh, I'll jump right into it. Today's video is going to be titled "NVDA Reverses is the top end." Everyone's talking about NVIDIA, so I figured I'd cover it. But per usual, I will get into the economic data first and then dig into the charts. Just a reminder, I am host Justin Klein, and I encourage you to like and subscribe to this channel as well as our podcast, Invest Talk. Now, we had on Tuesday the New York Fed Business Leader Survey. That was the June number. That came in weaker than expected, negative 4.7. While industrial production the next day, that came in higher than expected, up nearly 0.85% year month over month. That's a pretty big move month over month. But this is May. So remember, when you're looking at economic data, make sure you're looking at something that's the most current. And obviously the Fed, New York Fed Business Leader Survey, that one is a little bit more current. Speaking of current, the jobs market, you had initial unemployment claims that ticked down a little bit, but clearly we are in an uptrend since the beginning of the year. And most importantly is the continuing claims. This is a 3-year chart. Going to a 1-year chart, you can see this is breaking out to the upside, and we are now above the level that we've seen. Actually, are we? Oh, we're right at the level that we were in January. So near the highest levels of the year. The housing starts, that one, sorry, let's pull that up. Close this out. There we go. Housing starts, that did tick down once again, and you can see that is in a downtrend. Okay, even if you zoom out to a 3-year chart, right, continues to be now at the lowest levels in over 3 years, lowest levels since the COVID crash. Okay, so and housing starts, that is a very good leading indicator, because ultimately those starts turn into um, actual homes being built. And if there's less houses being started, that means employment within the industry is certainly going to um, have headwinds. The building permits, that's a little bit less important because you can pull a permit, you can get a permit to build a home, but whether you are or you aren't is most important. So that is at the lowest level in, let's see, are we also? Oh, we not quite at the levels. Actually, yeah, we're below those levels. So the lowest levels since the COVID crisis. So the housing market, at least the economic impact of the weakening housing market, is starting to be felt in earnest. And what was interesting this week, however, was if you look at Fed data, you really didn't get a big change from what the market is expecting for Fed policy between now and the end of the year. We're still coalescing highest odds around 2 rate cuts, but if we don't get 2, higher chance of 1, and then 3 rate cuts is the next highest chance. So not a whole lot of movement there to move asset prices in any way, shape, or form. But let's dig into the charts here. We'll start off with NVIDIA because everyone wants to talk about that. This is clearly a reversal pattern. Now, what I will say is you had one here, right? This was what March data or March reversal. That was a big reversal candle on volume. You see that huge volume down here. And you had a bit of a fall through the next day. Kind of the same thing here, right? A little bit more of a fall through, that's for sure. And good volume on both of those days. Okay. We pulled back and we ended up moving higher. So just because you have a reversal pattern, and this was a bear flag, shall we say, because you never got above this high in March, that showed you there was more downside. But then you got a reversal of that move right here, and that's when you have to get a bit more neutral on the name. And then once you get above those March highs, that's when you have to get a bit more bullish near term, and you obviously seen that, right? Simple charting, nothing too complex there. Now the MACD has rolled over. That is of note. That is a higher high. That's a positive. So nothing that is going to be a death knell right away. But just because it played out like this last time doesn't mean it has to play out again. right? This easily could reverse dramatically. And what I will say is with NVIDIA, it's a CapEx cycle. And the question is, when will that CapEx cycle turn? When I say CapEx, this is CapEx from really the major players in AI. That would be Meta, that would be Microsoft, okay, and that would be Google. These are all the names that are spending massive amounts, and Google is, I think, number one, on of their billions of dollars, and they're plowing their profits into AI and NVIDIA chips. And if they stop that or slow that, that's going to, I think, be the catalyst for a major NVIDIA reversal. Now, I do think that happens by year end, but that doesn't have to happen, this quarter or the third quarter, right? And we're pretty much done with this quarter after next week. So, um, and you can see with Meta that when I'll zoom out to a weekly chart here. Remember, Meta put all their money into the metaverse here, and the market was saying, well, they don't like the financial implications of that and the lack of real business opportunity that will bring. And they pivoted, right? Meta pivoted, and their stock has recovered. So this is an example of when a company can, you know, go down one road, and all these major tech companies are going down the AI road. But are they doing so in a way that will ultimately drive more revenues and profitability? If it doesn't, at some point, what happens? They stop spending as much. And that's when NVIDIA growth will slow, and you could even see negative um, earnings growth for NVIDIA at some point. And obviously that would crash the multiple, and the multiple is very high right now. So I wanted to just discuss that and say, on a weekly chart, this is a reversal pattern on good volume. It is an extreme volume, I will say that. So that's something to take note of. And you never really got that good of a reversal on the weekly chart on volume as well. And I would want to see some follow through on the weekly chart on volume before I would say, okay, Nvidia's top is in. Now, is it going to stay the largest company in the world forever? Actually, it didn't, right? I think Microsoft passed it after this recent drop. But, it just goes to show you that this is going to be a volatile name. There's a lot of, I call weekends, right? Retail investors in this name. And, when it reverses, it will reverse powerfully. Is the top in? I can't say, I don't have a crystal ball, but this is a good starting place of where a top would come in. Let's just say that, based on its extension from the major moving averages, the nice volume we saw this week, close near the lows of the week, and that is that's a hall. Those are hallmarks of a potential reversal. Now, let's get into the broader indexes. The Qs had a nice reversal this week. Let's go to a weekly chart here, and what you'll see is this is my computer's running a bit slow. I think it's because I used it. The battery's low on the plane doing some work. But this is also a reversal topping tail. And I usually like these most on the weekly, and this is definitely one you're seeing on the weekly. The S&P, you're seeing a similar pattern here. It's not quite as powerful, it's a bit more diverse. The Nasdaq, obviously very tech focused, heavy weighting in Nvidia. Here's the XLK, right? This is the technology sector ETF. Now, when it comes to other parts of the markets, financials, they're hanging in there. Industrials also looking, pretty solid. This looks like just a consolidation period. So, despite the slowdown in overall, despite the slowdown in the overall economy, as we kind of highlighted before, this is definitely a picture that is more neutral than bearish, right? It's more neutral, and I think we're going to get a more choppy period. Now, here's the growth to value ratio. This did resurge once again because the NVIDIA trade, but that reversed this week. When you're looking at I want to look at a few other things. This is the my computer just wants to act slow this evening. This is the commodity sector that it continues to pull back. That shows probably the most weakness, and I really think that's on the back of the dollar. Right, the dollar remains pretty strong, and that's going to weigh on certain parts of the market. The energy sector, try to get a reversal on Thursday. This is still in a downtrend, and until you break this downtrend, until further notice, this you have to be, probably somewhat neutral. Long term, I think it's still fine. My computer just doesn't want to cooperate with me, but you can imagine the downtrend line here that you want to see this break. Now the MACD is turning up. That would be that's a bit of a positive. We'll see with next week. You are into some major support here, so will we find a reversal in the next week or two? I think that would be of interest. What else do I want to get to? The move index. The move index, that one has started to move up a bit, but it still remains in a downtrend. So that's not something that you worry too much about at this point. Um, Sorry about that. I don't want to get to that one. I want to get to this. This is the credit markets, SHYG to the SHY, so short-term junk to short-term treasuries, and that remains relatively solid. So once again, despite the slowdown you're seeing in the economic data, it's not really manifesting in the charts. Okay, you are seeing some continued flight to safety. This is the utility sector, obviously an uptrend, a bit of a pullback as of late, but still, this is in a pretty strong position. So I wouldn't worry too much about that sector. I think that is relatively bullish. And bonds, here's the IEF. I could also move over to the AG, which the aggregate bond index obviously looks pretty similar. And what you're saying is this is rallying. Interest rates are dropping a bit and starting to price in a Fed rate cutting cycle. So I am a bit bullish on bonds, at least in the near term. Maybe not the long term, but at least in the near term. Okay. Let's see if there's anything else that I wanted to get to. Oh, gold. Gold did pull back on Friday, but had a nice reversal on Thursday. I believe that was probably the news, the jobs news, so I showed you earlier, just a weakening jobs market. And then a down day on Friday that reversed it. So overall, though, this is just a consolidation period. Nothing really nothing to worry about. Silver looking very similar. Obviously, silver tends to be more volatile. That means the chart tends to be a bit sloppier, and that's just what you get. But ultimately, I think that's still in a bullish phase in the medium term, but in a pullback in the short term. Do I want to get to anything else? Oh, I wanted to get to this just because it gives you a broader picture. Some people focus on the S&P, they focus on the Nasdaq, they focus on the big FANG names, but these are broader equities. And this is the NYSE. This is 2,500 different names, and the clearer picture that you're getting here is markets are choppy. They're choppy. Is it bearish? Not necessarily. Is it bullish? Not necessarily. It's pretty neutral. So I think you continue to get this, right? Especially when you zoom out. These choppy periods can last a while, right? Look here. As the market kind of topped in 2021, the Nasdaq was going higher, but markets were peaking and we rolled over in 2022. Could I see that again? Sure. But remember, markets or the Fed was getting more hawkish in 2022, not more dovish. Now we're going to election, in just a handful of months, and the Fed is getting more dovish. So instead of a consolidation topping period for a rollover, you could get a just consolidation for a continuation higher. Both are plausible options. Anybody who says they know exactly which way that's going to go, they're lying to you. They don't know. But obviously, we're going to follow along. We follow the data. And as soon as there's a clearer picture, then we'll reveal that. We'll talk about it. But we're just here calling balls and strikes based on what we're seeing on the charts in the economic data. And that's what we're here to do. So hope you got a lot out of that video. Know that the world's not falling apart tomorrow. Also, not everything's going to moon to infinity, right? Bitcoin's a good example. Everyone's been bullish on Bitcoin post the ETF launch, and here's the daily on that. That initial surge, and this is kind of actually looking fairly weak. So I would say Bitcoin, I'd be a bit neutral. This is just a Bitwise Bitcoin ETF. So once again, that is a leading indicator typically of where asset markets are going to go. And we are in a choppy period with a lot of indecision. And sometimes that's just what it is. Everyone wants a clear answer. It's bullish, it's bearish. Hey, sometimes it's just kind of neutral. And that's where we're at. So it's a stock picker's market. Some stocks are going to top, some stocks are just bottoming. And I think there's still a lot of opportunity in this market. Still a lot of opportunity. Probably not the big FANG names, but still a lot of opportunity. Okay. So I wanted to just highlight that real quick and give you a rundown. I appreciate you all tuning in. And a reminder, the contents of this video are for educational purposes only and should not be construed as a recommendation to buy or sell security or to participate in investment strategy. The views are my own and do not represent those of KP Financial or those associated. Have a wonderful weekend.